Morning, Steve Free in Chicago with the morning grain comments. Prices are higher overnight with beans at 14.07, up 24. The corn market up 10 at 570, and wheat's up anywhere from 13 to 15 cents. Stock market's also higher, trying to rebound from yesterday's washout due to concern about the spread of the Delta virus. Crop behind me is the field that I've been looking at close to our home here, and you can see it's pollinating. The USDA rated the crop 65% good to excellent versus 65 last week and 69 last year. Your best crops are Indiana, Michigan, Nebraska, Ohio, Tennessee, and Wisconsin. Your worst crops continue to be Minnesota, North Dakota, and South Dakota. And some are questioning the USDA's 179.5 yield because the ratings are below last year's 172 yield. Soybean crop rated 60% good to excellent versus 59 last week. Again, best crops, Kentucky, Louisiana, Mississippi, Nebraska, and Tennessee. Worst crops, Minnesota, North Dakota, and South Dakota. Again, the funds may be unwilling to buy corn until they actually see lower yields and pick up in export demand. Most people look for lower South American corn exports, maybe down 10 million tons or 400 million bushels that could be shifted to the U.S. and bring the carryout for 21 and 22 down. 73% of our winter wheat harvested versus 59 last week, and that could reduce the amount of hedge pressure on Chicago and KC futures. The surprise was NASS dropping the spring wheat ratings 11% good to excellent, only 1% higher than the record low of 1988. Last year, the crop was rated 69% good to excellent. We're also concerned about lower yields being reported in the Russian wheat, and also the farmers are not selling, and bread makers are talking about increasing bread prices. Kazakhstan is either planning to ban exports of grains and feedstuffs, or at least reduce it considerably due to their dry weather. We also note that some people are feeling kind of reluctant to come in here and buy the markets because corn could be harvested here as early as September, and by October 1 you could have 16 billion bushels of corn supplied to the marketplace. You could say the same thing about beans harvesting in late October, and 4.5 billion bushels available to the market. Still, the numbers are bullish at these price levels. We still have key resistance above the 1450 area nearby beans and the gap area in nearby corn. I still think that when we look at prices, $5.50 is too cheap for December corn, just like $14 is too cheap for November soybeans. As always, these are my thoughts and not those of ADM or ADM Investor Services. Have a safe and profitable trading day. And remember, always treat people like you yourself would like to be treated.